Okay, good morning, everyone. Thanks for joining us in this the start of the weekend. Today we have our second lecture of Informatics for Management. As you might recall, in the first lecture, we kind of gave an introduction. We gave an overview of the structure of the course. I explained to you how it would work, what you could expect from the exam, how would we evaluate you. And afterwards, we already explored some very fundamental concepts in this course. Also in preparation of the exam, make sure that you know these concepts, that you know what they mean, that you know how to apply them. Very important concepts that we discussed include this IT productivity paradox, for instance. Make sure that you're able to understand it, to explain it, to apply it. We discussed this idea of digital transformation and this two-phase approach. I mean, the first phase where you only apply technology, and the second phase where you actually use it to change your business model. We discussed this high percentage of IT projects which are not fully successful, the chaos report of the Standish Group. We discussed this business IT alignment gap. Scientific research indicates that it's still a very pertinent problem already for decades. And in the end of the lecture, we focused on this business IT alignment gap. And I tried to show you how many different steps and intermediate layers we actually have in this business IT alignment issue, where we, in the end, need to try to go from a strategy, profit margins, market percentages, make sure that you gain a good competitive position in your market towards bits and zeros. So bits, so zeros and ones. So this distinction or this distance is quite wide, and so I try to clarify where this comes from. To conclude that this whole course tries to give you the means, tries to give you some techniques, some tools, some knowledge to contribute to bridging this gap. Yeah. Any questions still related to the previous lecture? Things that you want to have clarified, things that were unclear, things that you want me to re-explain? Feel free. But I see no hands. So I take the positive interpretation that then everything was super clear and sound. But of course, don't feel shy to ask also questions during the break or afterwards. Okay, then we start for the second lecture today, where after having proven how important it is for you as managers to study informatics for management, we really dive into what are these enterprise applications. So in this part, we will really look at what are the types of information systems, the type of IT applications that we generally use within organizations. What are their different characteristics? So we will discuss mainly two typologies. A typology is a way of putting types into something. Partly, of course, that's a bit theoretical because we will use a typology, we will describe it, we will say what the differences are. In reality, sometimes you find very clear examples. In reality, often they will also be a little bit combined. But the real value is that once you know these types, once you know their characteristics, you also know what this implies. So even if in reality, it might be that in certain cases, several types are combined or that they are not fully mapping, but somewhat related. At least you will know what it means, what it implies, and that's the real value of what we will see today. So we will start by describing two of those typologies. The paper that's associated with this chapter will even focus on a third typology. We will not discuss that in class, but you can read it, and there are some reflection questions on that on the online platform. We will, of course, give some examples of each of those systems. And then in the last part, and I think it's a crucial part, we will also discuss some managerial challenges that are connected regardless of the type of information system you're dealing with. There are some very big misconceptions or confusions about how to use enterprise systems in organizations. And so I want to highlight some of them and clarify them. And then after this part, we will shift gears, not only saying which types of information systems exist, but also how can we build them? How can we actually create them or adapt them? I also already explained last time that what I will try to do is I will try to connect this course to other courses, other content that you see in other courses. And so we will use one of those existing frameworks that you might know from another course to link these typologies, to map these systems. And for that, I would like to ask you, who knows this person? This is Michael Porter. The last few years, I saw some hands rising, so I was hoping that also this is very good, very good. Where do you know him from? Any suggestions, models, IDs? 5 Forces. Very good. We will use that model, but not today. So we will use it in 2 lectures, so not the next one, but the lecture afterwards. 5 Forces, very well known, probably his most known model. But there's also another model that he created. I don't know before or after, but it's also quite well known. And that's the one we will use today. So next to the 5 Forces, any other ID? Sorry? The value chain, yes, indeed. Porter's value chain. Porter is professor in Harvard Business School, and one of the strong points is that he's able to provide models which are generally applicable. So they're rather they're general, meaning that of course they are not super specific in certain elements, but having the benefit that you can apply them to most organizations. And indeed, the value chain is one of the models that he has proposed as well. Is there anyone who can also briefly explain what it actually means, how we should read it, what is the purpose or the value of it? What does this graph tell us, or this graph, this picture? Yes, yeah, indeed, it goes into that direction. The idea behind Porter's value chain is that he indeed says, well, look, there are 2 types of activities. You have the primary activities, you have the support activities. The primary activities are those activities that are meant to add value to your product or your service. So there he wrote inbound logistics, operations, outbound logistics, sales and marketing and servicing, meaning that, okay, if you produce something like a car, first of all, you might have components of that car, the doors and the wheels and the chairs and so on. And so you need to have some kind of a system, you need to have processes in order to be able to let those parts come into your factory. As a next step, of course, you need to assemble everything. So you have operations, you might have an assembly line, and you need to make sure that those raw materials, those parts, those components, that they come into one product. As the next step, you need to be sure that your product gets to the client, gets to the customer, the person who bought your product. So you will need to have some dispatching, some logistics. You need to make sure that the car, in one way or the other, by ship, by truck, by other means, gets to your customer. That's even not sufficient, because you will also need to explain to customers what the product is that you sell. You will need to make clear to them that the product has a value for them. So you need to make sure that your customers order, that they make the order, and even after the order, after they have received their product, you will need to be able to provide them some servicing. So if something goes wrong, if there's a defect to your product, you need to provide them maintenance and so on. And the idea is that all those primary activities, each time that you go through one of them, the value of your product increases. Because here you only start with loose parts. Here you assemble them. So here your product is already more valuable than here. Once you have delivered it to the client, it's again more valuable and so on. That's one type of activities. The other type of activities is supporting activities. And your colleague indeed rightfully said, okay, these are often associated with costs, which is kind of true, but the main difference is mostly that those activities, they directly provide value to your product, whereas they're also necessary, but they are supporting, in the sense that those do not clearly add a value, like, okay, maybe here the value of your parts is 10,000 euros, but once you have assembled it, it might become 20,000 euros. So here you clearly see an increase in value, Whereas here, you need those elements. You need to make sure that you have human resources management, that you make sure that you have this group of staff, a group of people who are working in your, for instance, car assembly factory. You need to make sure that you have administration, accounting, that you make sure that you have engineers working on the design of your product. So you need all of these. So these are not, it's not that they are useless. You need them, but they are supporting. They do not directly contribute to the value of your product, but they are needed to support those primary activities. And the idea of the value chain is, well, this is a general structure that you can apply to most companies. And in the end, of course, the idea is that the value that you have added and of which you are able in the end to sell it to your customers. So the value, the exchanging value that you get from selling it, that should be higher than your costs. So if the value minus the costs is positive, you get a profit margin. What is the drawback of this kind of model? Because those models are often very powerful, but they also have some drawbacks. Even the ones from Porter. What might be a limitation of this model? Where are companies that you might think of where this is not super useful, or this might be less pertinent? Yes. Yeah. Mm-hmm. Yeah. Yeah, indeed. So certain more tech companies, or even more broadly servicing companies, some companies really providing service like insurance, consulting, or even technology companies providing a software. Those, and specifically those primary activities, inbound logistics, outbound logistics. If you provide an insurance, there's not really a logistics part, incoming, outgoing. So in those kind of companies, for instance, some people say, well, you need to slightly adapt your value chain. And for instance, you need to group them because basically everything is operations. You still sell your insurance. You still have some kind of after sales service. But this operation, well, this is everything here combined because, for instance, you don't have the inbound and the outbound logistics. Nevertheless, this model remains very powerful, remains very relevant, because it's so general that regardless of the type of company, you can, every company needs its administration function. Every company needs human resources. Every company needs design and product design. So it holds its value in its general applicability. And voila, here on this slide, I have mentioned a little bit what I just explained. So what you can do then, because it's so generally applicable, is that you can do some analysis. You could, for instance, say, well, let's look at each of those processes of these value chains, or let's look at how efficient we are, and let's see where we can improve efficiency and so on. That also means that we can actually use it to study information systems within a company. Because what we could do is, often people talk about enterprise architectures where they will make a mapping of the different information systems that are there in a company, and there are very complex frameworks to do that. But a very simple and a very easy way to start that exercise is by actually using, for instance, Porter's value chain, and to look for each of those activities in my company, which are the information systems that are out there. Which of those activities do they support? Which information systems do support my finance and my administration? Which of them support my human resources? Which of them support my inbound logistics? Maybe some information systems tackle multiple areas, or maybe within one area you have multiple information systems. But it is already a good start to look at, okay, what's the general overview of my company? And here, in this case, we might look at it from this information systems point of view, where we really try to map to get an overview of our systems, and we relate that to Porter's value chain. In reality, companies, of course, they don't operate in isolation. They might even not be the final step before the product or service is delivered to the customer. So in the upstream of your value chain, you might have some companies that deliver you some goods, some services, or it might be that your product is then delivered to other companies downstream, who will then further add value before actually arriving at the final stage of the chain to deliver the product or service to the company. Yeah. And why is this interesting? Well, if we look at a company, I already said it, often we have multiple information systems in a company. I mean, the type of software that end users, you and me, normally use in our everyday personal environment, like word processors, browsers, operating systems, spreadsheets, they are nice, they work well, but you already see from this value chain, these type of systems are not enough to cover all those activities if you want to do it in a professional and efficient way. Nevertheless, we see in some companies, small and medium-sized companies, sometimes even big companies, sometimes even big governments, that for whatever reason, for instance, urgency, that they do take their chances and trying to use these very basic end-user software systems. What we saw, for instance, during the Corona pandemic was that, there a lot of information needed to be processed, a lot of information needed to be presented, and basically the world was not really well prepared. And what then happens sometimes is that people say, well, we don't have the time to really develop a full-blown information system. We need to be quick. We need to be up and running quite quickly. So let's use, nevertheless, some of those end-user softwares that exist, like a spreadsheet. And then we saw that, for instance, in some public health organizations in the UK, they used Excel to count, for instance, coronavirus cases. Well, it works. In the end, Excel allows you to do all kinds of operations and calculations, but it is very, very error prone. We will discuss it a little bit later as well, and also next session. This kind of end user developed software, it's very tricky. It's easy to have mistakes in it. It's often not fully secure. It has not been properly tested, validated. Sometimes it's necessary. Sometimes you have an emergency and you have no other way to do it. But this is very tricky. And sometimes in the case of these in the Corona pandemic, well, we saw that this end user development, it caused a lot of errors, meaning even reporting wrong numbers of coronavirus cases, which might lead to policy decisions or management decisions that are based on not the fully correct facts. So your end user software is not sufficient. We will need to use more professional, more well-developed information systems, and we will try to use a Porter's value chain to map those, to see where they are in the value chain. I already mentioned at the start of this lecture, we will consider two types of typology, just to give you an overview. One of them is a very well-known one. I call it the vertical typology, but it's just a term that I coined to it just to make the distinction with the other typology. And you will see in a few slides later on why I call this a vertical typology. And then later on, we will also see another typology, which I then call the horizontal typology. And they're kind of, they exist next to each other. Both are good ways to look at different types of systems that exist. We'll start with the first one, which are called transaction processing systems, or TPS. TPS systems, first step in understanding those systems, in knowing what they mean is, of course, remembering this abbreviation, TPS, transaction processing system. Once you know that, you can already arrive a lot, because it's a system that processes transactions, as the name already says. And so what they will look at transactions in an organization. They will register it, so they will save it somewhere. They allow the reporting of that data. And transactions are something that occur regularly in an organization, that are crucial to their everyday operation. But then, of course, we deviate a bit the question and we say, okay, now we know transaction processing systems that process transactions. What are transactions? Well, transactions are defined as an elementary event in an organization. Elementary event means a thing like a payment, like an order, like a shipment. So very clearly identifiable events. That is something that we call transaction. They happen a lot of times in an organization. I mean, imagine the amount of orders that you get in an organization. If you look at an online retailer, they receive hundreds, thousands of orders per day. the amount of shipments that they do, hundreds, thousands of shipments per day, payments, hundreds and thousands of payments per day. So these systems, they really focus on those core events in organizations. And such a transaction is then often only one step in a business process. If you have the order to payment in an organization, well, there are a lot of transactions that happen in between. First, you have a customer that places the order, then you might need to do the gathering of the products, then you might need to assemble it, then you need to ship it, then you need to have the payment. So a lot of transactions happen often within a business process. So transaction processing system will focus on these transactions, and transactions are part of those business processes. Why do we do that? Well, first of all, these are the basic things in an organization. These are the basic steps of your business processes, and they allow employees, managers, and so on to focus, to monitor each of those transactions. How are our payments going? Are they successfully executed or not? What is the amount of payments that we get in? How are our orders functioning? How many orders do we get, and so on? So they allow you to monitor those transactions at the individual level. So they allow you to look at one particular payment, one particular order, and so on. That also means, because they really focus on those fundamental transactions, fundamental steps in an organization, that they are most of the times used at very operational levels in the organization. People who are concerned with making sure that payments are processed correctly, making sure that the orders are processed correctly, and so on. That has some implications, some very important implications, that normally, if all goes right, you have many orders, you have many shipments, you have many payments, so that those systems, they have high volumes that they need to process. Many transactions exist, and for each of those transactions, hopefully you have many, many instances. And so you have and orders and shipments and payments, but for each of those orders, shipments, and payments, you hopefully also have many, many instances. That means that, as I said before, there are a lot of transactions, a lot of entries in those systems that arrive. Many or much data is generated, and also those processing requirements are then quite high. Suppose that an online retailer, like Amazon, like Bol, like whatever, if certainly their order processing system doesn't work anymore, or their payment system doesn't work anymore, then they have a big issue. So they need to be able to cope with peaks, high demands, a lot of people using the systems concurrently, and they also need to be designed to be mission critical. So they need to be up and running often 24/7, and they also have high performance requirements in the sense that if real-time processing is needed, for instance, well, they need to make sure that they can handle those amounts of data, those amounts of transactions at the time that they are also executed. Other implications are the fact that, well, if they focus on those elementary steps in a business process, that means that they are heavily predefined. A payment is a transaction, or is a transfer of money from person A to person B on a certain amount in time, a certain amount, and a certain currency. That's it. So it's very predefined. It's always the same. An order is these amounts of products ordered by that client. That's it. A shipment is a certain package that is delivered on a certain date, on a certain address. That's it. So they do require a high performance, but they are very predefined, always the same. So that also means that if you want to use those systems for decision making, for analysis, well, they allow you to get an overview of all the orders, of all the payments, of all the shipments, but that's it. It's very fixed. You will see the orders that have been placed. And so the functionality of those systems are also very basic. They allow you to create records, to read records, maybe to update, to lead, to search a particular order and look, was it completed, was it not completed? But that's it. I already said that they're mission critical. An online retailer without an ordering system doesn't work. A bank that cannot process any payments, it also doesn't work. What does it mean for Porter's value chain? Well, that basically means that those TPS systems, they can focus on any area. So it might be that you have a TPS system that focuses on the inbound logistics. You receive a certain product. Can be that you have a TPS system that focuses on the operations, where you say, well, this product has been assembled, so an assembly is one transaction. Can be, as I said before, the delivery to a certain customer. So it can focus on any of those areas of Porter's value chain, but often it will focus on one. So not multiple, it will focus on one, a very specific event, a very specific transaction in an organization. Yeah. As these are the very basic data of an organization, that also means that these systems, they often serve as input for other systems. In a few minutes, we will see next to TPS systems, we will see other types of systems like MES, DSS, ESS, and so on. They often will make use of these very basic fundamental data of an organization. They will need those transactions to do something more. An example might be the payment of within a payroll system. It will use some input data like who is working in our company, what is their address, what is their pay grade, and so on. But in the end, the paychecks that go out, one transaction, one payment will be the actual focus, will be the actual functionality of a transaction processing system. So I gave quite some examples already. If we look at a package delivery company like UPS or DHL or whatever, okay, I already said delivery. One delivery is a transaction, so that's an easy giveaway. Can you come up with other transactions, other examples that might be the subject of a transaction processing system for a package delivery company, except the delivery maybe itself? What might be an elementary event in an organization, in a business process of a company like UPS? Yes? Yes. Order, delivery, payments? Yes. Any other IDs? Warehouses? Yeah, but that's a bit broad, in the sense that for sure there will be transactions in a warehouse, but it might be, for instance, the receiving of an order, the receiving of a product. So it comes into the warehouse. That might be a transaction, but warehousing as such is rather broad. It will contain multiple transactions. Yeah? So I've listed some here. Could be a service request for a customer. I want you to deliver something to someone else. The payment, the receipt, as you just said, the receipt of the package, so the incoming flows, the delivery, the actual delivery of the package. Other things as well. They use a lot of trucks to deliver the products to their customers. Well, each time that you do some kind of maintenance to that truck, you can consider it as a transaction. Each time you do a payment, not only that you receive a payment, but also the moment that you actually pay yourself to a supplier, that's a transaction. Often those companies, they ask, after their service, they ask some feedback from their customers. Well, each feedback item, each reply to such a questionnaire can be considered as a transaction. So in every company, you will see that a lot of transactions are there, and you need transaction processing systems to take care of them, to register them, to store them. Yeah. I might, for instance, ask on the exam, okay, explain me what is a transaction processing system, give me some examples, or I might describe a certain system, I might give you certain examples, and then I might request you, okay, given the different types of systems that we have, is this a transaction processing system or is this something else? Yeah. That's the first type of system, transaction processing system. Rather clear, rather straightforward. No? Okay. The second type of system that we have in this vertical typology is what's called an MIS, Management Information System. It's a bit strange that but okay, I mean it's used like that in scientific literature. Management Information System in this typology really goes to one specific information system. Some other contexts, management information systems are used for a broader type of systems, but strictly speaking, they actually really focus on one particular type of information systems used in the organization. And those are different from transaction processing systems. Those are the systems that provide you with predefined reports. So they're not about registering transactions. It's not we or we register the order, the payment, and so on. No, they will provide you reports. They will provide you overview. Why? Because, as I said before, you have many orders, many payments, many deliveries, so you need to have an overview, and that's what those management information systems do. They provide you reports, but in a predefined way, so always the same. What can happen? It can be that on a regular basis, every week you want to have an overview of the orders that came into this store, and you want to have the overview every week. Could be that at a certain point in time, you see that there's a low stock. You walk around in your warehouse, you see the stock is low, so you generate a report to have an overview of all the items that are normally there in your warehouse, and you want to have the number per each type of item. Or on an ad hoc basis, where you are thinking about new products and you say, well, maybe this product, I don't know, is it still viable? Is it not viable? Give me the sales for a certain product in the last 3 weeks to use that information for your further management decisions. Just as TPS systems, that means that they're quite fixed. It's always the same. When they are developed, certain decisions are taken with respect to which data will be incorporated, which transactions will be used to create those reports. Will it be reports on the sales, on the payments, on the production transactions, whatever, but decisions will be taken which data is incorporated. Also already how it will be aggregated. Will it be still very fine-grained reports? Will it be more high-level reports? Will it allow you to filter data on a temporal basis, so weeks and months? Or will it allow you to do some aggregation another way, alphabetically, whatever? Those kind of decisions are taken. How it is presented could be very analytical in terms of text, but could also be graphs and so on. And they're fixed, meaning that they're also, like here, in a routine way, they're used, predefined things that you need on a regular basis that you know upfront, I need to have this overview. That means that they might still be used at an operational level, people doing the orders and the payments, because it might be interesting for them not only to look at the individual level of a transaction, this particular payment, this particular order, but to have an overview of all the payments, all the orders in a certain period of time, or even by middle management, one layer higher in an organization. As you already can derive from my explanation, that means that they cannot exist on their own. They cannot. You cannot just create an MIS, a management information system, out of nothing. No, you already need pre-existing information from other systems, such as those TPS systems that we just discussed. So they rely on them, they use that information as input. That also means that whereas for TPS systems, we said, well, usually they can be applied to each of the activities within a porter's value chain, but often they will only choose one of them. They will be applicable to only one of them. With management information systems, well, they will often combine a few transactions, types of transactions. They will provide it overview. So it could be that a management information system focuses on only one activity of porter's value chain, but they could also aggregate transactions from multiple domains. In terms of its management, it also means that they are less mission critical. I mean, if you have a company where certainly you cannot do payments, you cannot do orders and so on, you cannot do deliveries, you have a problem, because at that point, the company doesn't work. It doesn't produce value. It cannot make any sales. No money is coming in. A reporting system like a management information system is less mission critical. Of course, you don't want it to be out for weeks and months, but if certainly you have, sometimes you have a downtime of 1 hour, 2 hours, 3 hours, things will keep on going. You will still be able to do payments, orders, and so on, so they're less mission critical. Some processing capacity is needed, but there are some approaches now to make sure that big amounts of data can be processed in good ways, or can only be updated at certain points in time. Often when you generate reports, if you are basing yourself on the information of yesterday and maybe not of the last few seconds, most of the times that's already sufficient. So most of the times they use real-time information, but often when the volumes are very big, they might even say, well, we don't really need real-time information. It might also be a bit delayed, the information. And then we still have that information still sufficient to use for our management decisions. Example might be that you get a table like this, where, as I said before, you have different types of systems. So maybe in a DHL company or UPS or some kind of similar company, you might say, well, ideally, or in essence, we have three product types that we ship: small, medium, large packages. Let's look at the sales that we had for a particular month of each of those types of products. Let's look at the cost that we had, and then we can calculate the profit. So it's an overview. It's not the individual level of payments orders. It already provides an overview, but it's always the same. So if you create a management information system like this, it will always be maybe, I mean, of course, you will be able to change the month, or maybe to include an extra product type or whatever, but this is then the type of output you get, always the same. But it can already provide useful management information. Often TPSs are so fine-grained, are so detailed that information on one particular payment, one order will not provide you insightful information as a manager. MIS systems can already do that. They can provide you information where you say, well, here the large packages, they are the lowest in terms of sales, but they also cost most out of the three product types. So these two types of packages, they're profitable. This one is not. So it gives you some kind of information that in this year, in January, apparently we made a profit on those two types, but a loss on this type. Yeah. Again, let's make a short exercise. If we look at a package delivery company like UPS or DHL or one of its competitors, what might be possible management information systems that might be used in a company? This might also be something that I ask on the exam, for instance, like give me some examples of what a management information system might do at a pharmaceutical company. And then hopefully you are able to come up with some answers. Some answers might be, well, it might be a fixed, predefined report that tells us how many deliveries we in our company sold in a certain period, in a certain geographical area for a certain marketing segment. That might be the purpose of a management information system. What kind of profit did we make in a certain period, in a certain region, in a certain marketing segment? What's the percentage of delayed package deliveries? So these kind of managerial information, okay, you know that you have deliveries, but you also know that you have a promised order date in your order. You combine that information and you try to see what's the percentage of delayed package deliveries. It might be that you as an organization, that you have a certain target, that you have certain KPI, and you say, well, at least 95% of our packages, they need to be delivered on time. Well, then these kind of information that comes out from an MIS might give you the information whether you're below or above your KPI. What's our average fuel consumption? Maybe you have some costs or some green goals, and you want to be able to report on that on a systematic basis, on a regular basis. And you want to use, for instance, all the transactions that have been registered in your TPS system, telling you each time someone with a truck is taking fuel. Well, then you can make an overview or report of what's your average fuel consumption. As said before, TPS systems, they might focus on one, but they often combine several steps, several activities within Porter's value chain, and they will use that information to create routine reports. Now, we go one step further. We look at the decision support systems, the DSS are they called. A decision support system, like MIS systems, they also generate reports, but where an MIS system does that in a very predefined, fixed way, decision support systems, they will create reports in a non-fixed way, in a non-routine way, and so they also allow you to do some non-routine decision making. These are things like impacts or sensitivity analysis. Suppose that in the upcoming Christmas period, suddenly the orders go up 10%. What might be the influence on our timely delivery, on our costs, on our staff burden, these kind of things. what might be the impact if suddenly there's a flood in one area of our country and we cannot rely on that warehouse anymore? What would be the impact on our sales, on our profit, these kind of things? So they're of a completely different kind than MIS reports, predefined overviews, always the same. So they're a bit ad hoc, not ex ante defined. But given that they are not predefined, given that they are not fixed, that also means that you as a user, you will need to interact much more. In an MIS, it's basically clicking some buttons, saying this and this and this criterion, I want to use it, I generate report, basta. In those decision support systems, you as a user will need to provide input as well. You will need to provide or to define which statistical model you want to use. You might need to provide some market data because, okay, you say there might be an increase of sales in the Christmas period, but what kind of sales? So maybe there are some market studies that provide you with the information that these products are very trendy this year, so they might go up and they have this size and this weight and so on. And yeah, it's a bit ad hoc, it's not defined, so it might be that you need to play a little bit around and that you need to do several analyses before you actually get the answer that you want, before you get the solution that you want. Like an MIS, a decision support system cannot work without information from a TPS because they will use the past data on the sales, the orders, and so on. And it might even be that they use the aggregated, predefined, fixed report data from an MIS as well. On top of that, they will not be limited to internal information within the company. They might use external information as well. As I said before, market trends, customer preferences. They might use that as the input for their calculations, for their analysis. And whereas for a TPS, it was very clear, always one activity in Porter's value chain. For an MIS, it could be one or multiple activities in the value chain. For DSS systems, it's quite clear. In most cases, they will really touch upon different domains in Porter's value chain. They are so complex, they are so advanced that often, the types of questions that they try to address are of a kind that, they need to touch upon those multiple domains. And so they're more than just a mere aggregation, which is the MIS that performs it. They really try to use a model for answering the questions that are asked them. As I said before, what's the impact of a marketing campaign? What are the estimated sales of a new product? If we adapt our production process a little bit, we have an additional step, we have less steps, we make one step a little bit quicker. What would be the impact on the performance of our production process? Suppose that we try out several alternative routes. I mean, some shipping companies in the United States, they have the policy that they try to have their trucks to go right to use turns to the right as much as possible. Why? Because in the US, in certain cases, you can always pass across the road to the right, not to the left. So they will not necessarily go for the shortest duration or for the shortest route. They will go for that route which allows you to have the most turns to the right. In those cases, you want to do some simulations. You want to make sure if we apply this new routing strategy, what will be the impact on our package deliveries? And so for sure, these more complex, ad hoc, non-predefined decisions, often they're not done by the operational people handling individual sales and orders. They will typically be managed by middle management. Those are kind of the preparation for more strategic discussions later on. So they're often done at that level. If we would look at UPS, some of those systems might be, it might be designed to answer questions such as what will be the impact on our revenue when we give loyal customers a 10% discount on all international deliveries? That's an interesting question, right? Because if you're preparing a marketing campaign, you might want to know that. But as you can see, you already need information from different TPS systems here. You need to have an idea of who are your loyal customers. How many do we have? And what's a loyal customer? A loyal customer might be someone who orders at least for this amount of euros or dollars per year. Well, first of all, you need to identify Which are those loyal customers? How many do we have? We have a 10% discount, so we need to look also at those transaction processing systems where we see the sales. And so what does it mean, a 10% discount? And what might it mean? Because what are the typical products that those loyal customers order? Maybe they offer products where we have a high profit margin, or they have a low profit margin. And okay, well, we say on international delivery, so we also need some information about this shipping transactions. How costly are they? How often do they occur, and so on? And then we need to combine that all to calculate our revenue. So you already see that they use TPS systems. They use TPS systems from different activities in Porter's value chain. It's not a predefined thing. It's not something that you easily regenerate every week, every month, or as you want. You will need a statistical model, combine all that information, and you might even want to have external data, market research that you want to bring into that model as well. Same for the other questions that might be answered by a decision support system. What is the impact of our truck occupation if our delivery requests increase 10% in December? Might be interesting to know, right? Because will we be able to deliver all our products? If yes, okay. If not, maybe we will need to try to make sure that we have additional trucks, that we have additional people who can drive with those trucks. Or maybe we can say, well, our truck occupation goes high so much, and we're not able to buy additional trucks, to hire additional trucks, to hire additional people. Maybe we need to increase our sales or our prices so that we decrease a little bit our delivery request. But given that the demand is so high, we can increase our prices and still profit from that market trend and increase our revenue and our profit. What will be impact on timely delivery ratio when the traffic will keep becoming more crowded? Suppose that the government decides to increase taxes with 15%. What will it mean? Other questions. Will we be able to deliver all our packages on average 1 day earlier with the current employee base? Are we able to do that? If we want to do a campaign, is this realistic? So these kind of questions are answered by a decision support system. And I visualize it here, meaning that it will focus on mostly multiple areas within Porter's value chain. It will generate non-return reports, and I've added those symbols, which you might recall from last lecture, where I said, well, we have some databases, and here I use it to represent external databases. So data that is not internal to the company, but might be market research, might be other kind of external data that you want to use. Yeah? Difference is clear? If not, raise your hand. Yeah? Yes, go ahead. Oops. It might be. I mean, I've not excluded that you can use Excel as a decision support system. I would not advise it, but we know that in reality, in a lot of cases, people still go to spreadsheet software to do that. However, one might still doubt to which extent it is feasible to really, in these cases, for instance, to really make a very adequate judgment of this question purely based on Excel data, because that would mean that in your Excel, you would need to import data of customers. That might be hundreds of thousands of customers. Normally, Excel does not go above a few million records. So normally Excel, well, you will normally not be able to directly import so much data. It means that you also will need to import from end customers and delivery data and profit data. So of course, I know that in some cases people will use Excel and they will do kind of estimates. They will use rough data and they say, well, the precise numbers or like roughly speaking, the estimate is good as well and does not need to be precise. So it's true that in a lot of cases, companies, they might use Excel or spreadsheets as kind of the proxy for that. But nevertheless, it will never be as precise. It will never allow you all those full analysis capabilities. I mean, if you want to do full regression analysis is even the simplest statistical technique. But often, if you want to look at what will be the impact of rerouting or the adapting our routing strategy to see what's the average on-time delivery of our packages, good luck to do that in Excel. So often that also means that people, on one hand, they will do some kind of a proxy. They will say rough numbers are okay, we don't need a precise number, and then fair enough. Or in some cases, people say, well, these systems are also they're quite expensive. Either you hire them from an external vendor or you need to build them yourself. But certainly if you're a smaller company, sometimes it could be that you simply don't have the budget for that. So yes, in a lot of cases, people might use Excel, and you might use Excel. I mean, you might even use Excel for your transaction processing system. There's nothing that prohibits you to list all the payments that you receive in Excel. I mean, it's just a table, so you can perfectly register all those things in Excel. So can you do it? Yes. It's more widely and it's more advised to write an actual database. The same for MIS systems. You can do this with Excel. Yes, of course. You can do that in Excel, but you can also build more advanced systems. I think it's even, it's for sure it's even more easy to build a TPS or an MIS with Excel than a decision support system. So yes, I agree, sometimes it happens. But there are also a lot of systems, statistical software combined with business intelligence that will allow you to do these kind of analysis. But not all companies have them. Which is also a good reflection in the sense that it might be, if you walk around in a company, some companies might not have any decision support systems. It might be that they just do it based on their intuition, that they do it based on some simulations in Excel, some simpler simulations. So it might indeed be that you come across an organization where they say, we don't have any decision support systems. In more larger organizations, you will often come across with them, but not in all cases. And then finally, in this vertical typology, you can already see like TP. I'm sorry, go ahead. Yes. Yeah. 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 No, indeed. So as I said, you might purchase indeed external software like Power BI, which is kind of those more popular business intelligence tools that they have today. Power BI, and that's also why I said, okay, this is the typology. Power BI, you could argue that you can use them as a management information system where you have a predefined report. And people who are very knowledgeable of Power BI, they might fine tune and tweak the system, and they might import external data, and they might even use it for some kind of statistical analysis. They might also use it for decision support system. But also there, it's nice to note that this Power BI thing, it will never work if you don't have the underlying data, if you don't have at some point other systems, TPS systems or whatever, who provide you the raw basic data, because Power BI will only make some visuals, will only make some tables and so on to aggregate what's there. It will allow you to make some predefined routine reports. So it offers you the possibility to create MIS kind of reports. It might give you the start for decision support systems. Nevertheless, as said before, it will require quite a lot of user input. It will require the user to know how to configure it, to know to apply which filters, to know who to apply which statistical models, and then play with it. So in certain cases, Power BI, which is indeed not too expensive depending on the license that you have, you can use it, for instance, to build these systems, yes. There are you could, I mean, there are statistical tools that you could use. For instance, you could say that you use SPSS or Stata or whatever. Sorry. Well, you're saying the system decides for you. That's something that decision support system never does, because it's the user who's driving something. You might have systems which automatically decide certain things, but then basically you're more on an operation level. You build, I mean, you want the system to take a decision. If you want, for instance, the system decides for you whether or not we will give a client an insurance, yes or no. That's the decision that a system takes, but that's not a TPS and MIS DSS. It's an operational system that helps you based on the information that's there, based on the model that you have, whether we will grant that customer a loan or an insurance, yes or no. But these kind of systems, they are reporting decision and management information systems. They are reporting kind of systems, so they present information to you, but the decision is not taken by the system. It presents information to you, and you can decide upon it. Yeah. Okay, last type of system in this vertical typology. So he said TPS systems are very operational, low level in the organization. MIS systems and DSS systems, they already are mostly used by middle management. And then we have executive support systems, ESS, which are often used by senior managers, CFO, CAO, CIO, and so on. And they are kind of MIS systems, but they combine information from all the resources that we've seen before. So TPS, DSS, MIS external databases, and they really only aggregate at the highest level of information at your company. Because they will, as your colleague said, they will not take the decision for you which market to enter, which product to launch, which would be the impact of a new customer, but they will assist you in taking strategic decisions. So they might aggregate information on your cash flow, on your profit, on your costs, on the interest rates that you're currently getting, on the outstanding loans, on your cash position, on your short-term loans, long-term loans, accounts payable, and so on. So it's highly aggregated information, highly aggregated and summarized information that allows them to have a real-time overview of the performance of a company, typically in a dashboard style, things like this. This very much resembles things that you might be seeing in Power BI, but the executive support or similar tools, but the executive support systems, they really focus on those high-level numbers. For instance, what is our current cash flow? What is our stock price, accounts receivable, payable, the market share, inventory, online customer base? So it's also very predefined. It will not allow you to use very much advanced statistical systems, but they will allow you to have the big overview of the key indicators, the key variables of your organization based on variables like this. Yeah. Just to end before the break, so we've now seen this first typology, TPS systems, MIS and DSS systems, ESS systems. The nice thing on PowerPoint is that you can do anything with it, in the sense that ideally all those systems are nicely integrated. Yeah? So you see data flowing from lower to upwards, and in order to function well, MIS and DSS systems, they need TPS systems, and ESS systems, they need both MIS, DSS, and TPS. So in order to function well, those different systems, they need to be well integrated. It could be that you come across in a company where those systems basically are already combined, when there's one system that combines MIS and TPS functionalities, or that already provides DSS functionalities and already makes the link to TPS systems. Or in a lot of cases, we see that organizations have many TPS systems, and hopefully some of them are combined in an MIS DSS system, and maybe the executive support system even does not exist. So depending on the company where you come, different situations might be there, but in an ideal situation, the data flows from below to top, and you have different types of people who are using those different systems. Yeah. So there's the nice thing on PowerPoint where you can do everything, and there's a reality where everything is a little bit loosely integrated. So what might be an interesting exercise for you is not only to focus on a DHL or UPS type of company, but for instance, look at a retail bank, financial institution, which we covered several times in the first lecture, and to ask yourself, okay, what would be functionalities of these kind of systems in this type of organization? In a financial institution, what would be the TPS, the MIS, the DSS, the ESS, and how can you link that to Porter's value chain? Is it one activity, multiple activities, internal information, external information, and so on? And then the most interesting part is, of course, also to see how these different types of systems are interrelated. Yeah. That's what is related to the first typology. After the break, we will look at another typology. We will also give some special cases of this type of typology. And then in the last part of the lecture, we will look at the management challenges. Yeah, it is now 10 sharp, so I suggest that at 10 past 10 we continue. All right.